The ECB is worried, legitimately, on the inflation front, so I do think they are likely to ease in March. Dean Maki, Chief Economist with Point72 Asset Management. ECB Chief Mario Draghi defended the Fed over their recent rate hike, saying the move had been flawlessly executed. With the next announcement from the central bank due on Wednesday, what are you expecting to see from this meeting?
Well, this will be an important meeting for the Fed because it will give them the chance to clarify what they're thinking about recent market volatility. So nobody expects the Fed to be changing policy this week, but I think the question is, how much are they going to worry about the recent market volatility? My view is they're likely to make only minor changes to the statement to reflect some of the incoming data, some of the softer consumer spending data, for example, but I don't think they're going to sound extremely worried about recent market developments. The Fed may respond to those market developments if they continue all the way through the March meeting. But if not, if the markets settle down, then the Fed is likely to proceed with their plans. So the Fed will want to keep their options open, so I don't look for any major changes this week.
Okay, and the euro area has a lot of data out this week as well, with business and consumer confidence set to be released on Thursday. The growth rate in the area has cooled somewhat at the beginning of 2016, which may prompt the ECB into further action in March. What is your assessment then of the euro area's performance so far this year?
Well, I think on the growth side, the euro area is actually still looking pretty solid. I would look for growth in the euro area somewhere around 1.5% this year, and the recent data flow has been a bit softer in terms of Q4, but nothing really worrisome. It's the normal ups and downs of data. And when I look at the Eurozone, they're benefiting from low energy prices and the weakening of the euro versus the dollar over the last couple of years. So the euro area outlook still looks fine on the growth front from my perspective. Where the ECB is worried legitimately is on the inflation front. Inflation has come in lower than they expected, and there is a risk of it staying low. So I do think the ECB is likely to ease in March, but it won't be because of weak growth. It will be because they're worried about hitting their inflation objective.
Lastly for today, are there any key indicators that you have flagged this week which are likely to shape the financial markets?
I think the biggest single indicator this week will be the U.S. GDP report on Friday. It does look like it's going to be a weak report. Consensus is looking for something like an 0.8 rise on an annualized basis. And I think, if anything, the risks are perhaps a bit to the downside of that. So that number is likely to be soft, but it is affected by some one-time factors. So I wouldn't be extremely worried by that, but it certainly is possible that affects markets. I think the other thing to watch for is the employment cost index, also coming out on Friday. That will be a good indicator of whether wage pressures are picking up in the U.S. Most indicators say they are a little bit. This will be the one the Fed trusts the most, and it comes out for the fourth quarter. So that will be something very closely monitored by the markets.
Thank you, Dean. Be sure to check back to see how these market movers develop throughout the week, and check back with Jessica Walker for our wrap-up on Friday. Goodbye for now.